with when we're trading the counter trend is the 1 minute chart. That's where people first learn to counter trend. Some people call them pullbacks, whatever you want to call them, it doesn't really matter. But let's talk about a couple of scenarios that we're going to look for. So the basic rules, first of all, with counter trending is we're talking about two types of counter trends. Essentially what we're talking about is retracement versus reversals. So in the world of counter trending, we only really have two types of counter trends. The first one, which we call a retracement, comes back down to the 13 EMA and then bounces off the 13 and continues with the initial direction of the overall trend, following the trend lines of the moving averages. As you can see here, we came down. It's a very short-lived move. It's a scalper's move, and you can't afford to get in late here. Your timing has to be perfect. Now, when Barbara does these types of trades, I assure you her timing is razor sharp. So if you're a nervous, hesitant trader, I don't suggest you do retracements, because chances are you're going to think about it a minute too long and getting too close to the 13 or on the 13. The golden rule you do not want to break with this retracement strategy is that you never ever want to get in when the price is on top of the 13 or it's touching or close to the 13. You always want to make sure that you're entering at the very, very top, and you want to make sure you're getting filled before the price hits the 13. So you don't want to even consider retracements that you don't think you're going to get your scalping 3-tick move. You generally want to take retracements that have a 5-tick move. Hold on one second here. All right, sorry, I had to get everybody under control again. Okay, so retracement versus reversals. I want to cover the basic rules because we do have a lot of new people, and so I want to make this part really quick because I want to get into more detail. So when we're looking at the counter trend, what essentially we're focusing on is the timing of entry. And the first thing we're going to be looking for based on the 1-minute chart is the circle with a dot, the candle with a long wick and tail, 5 or more ticks in the spread before we hit the 13, and the brown Linreg, the Linreg 4, makes a sharp V to change direction. And for those of you, we'll get to the HMA part in just a second. Those of you who want to trade on the reversal part, we'll be talking about the HMA. But essentially, for a classic gap trade, counter trend strategy, you don't actually need the HMA just yet. So let's look at those rules really quickly. We'll take a look at this one up here. Let me just do this for a second. Here, as you can see, there would have been a fractal here where the asterisk is. So if you can imagine, where the asterisks are drawn, we have a nice fractal going up there. Now, before the fractal actually appears, the circle with the dot comes in. So as soon as you see that circle with the dot and the brown Linreg, the Linreg 4, the shorter one, will go first before the orange, because the orange one is the slower one. That will make a nice V, and you'll usually have a long wick if you're going long, or if you're going short, you'll have a long tail. So when you have this long wick, or you see momentum has fallen off, can you see here we have the yellow, now we have no momentum. We've got enough spread before we hit the 13. we're looking to grab 3 ticks inside of a 5 or more tick spread. So as soon as you see that circle with a dot, you see that the Linreg 4 is made of V, you jump in on one of these red candles here and you go for your 3 ticks. That's the classic counter trend, and you can do those all day long. They're going to appear. The problem you have when doing counter trends is that if you get in too late here at the 13, can you see where the green candles come in and they bounce? This is where traders run into problems on counter trends, because immediately as they enter, they suddenly in risk. And you don't know for sure. We're going to look at the nuances that are going to tell you that that 13 is ultimately going to cross and continue lower. It could be a retracement and continue higher. Could be one of these. So when you see this green candle at this point, if you happen to get in too close to the 13, this is where you're faced with a real decision to make. The main problem is that the 3 out of 4 are fake outs. Well, let's take a look at that, and that's why I want to talk about these nuances. So first, I just want to make sure that you guys understand the rule. So anytime you see a counter trend, the first thing you're looking for is a circle with a dot, the candle with the long wick or tail, and the 5 or more ticks divergence. The Linreg 4 makes a V, and there's enough spread before you hit the 13. Now, the other thing you can also look for, especially the ones that have a lot of divergence, is the HMA changing color. Okay, now if you want to do a counter trend based on the principles of short-term, medium-term, and long-term, my recommendation is that you do the HMA changing color timing when the other time frames come into the mix. If you wait for the 1 minute to always change color, you're not always going to have enough spread. Sometimes you need to go, by the time the HMA comes in, changes color, then sometimes you're too close to 13. Now in this case, this one looked pretty good because you had a lot of divergence. But in something like here, if you were looking to grab 3 ticks here, by the time the HMA comes in and changes color, you're already on top of the support. You're too close to support, and there's a very, very strong probability for it to change direction. So the first point I want to address in terms of the details here that we're going to cover is you can't always, if you're doing a 1 minute basic 3 tick scalping trade, you can't always rely on waiting for the HMA to change color because it'll put you too close to the 13. Here's another example. Something like this. Let me just give you a couple examples. Here we're bouncing off the R4. Here's your wick, your asterisk, the Linreg makes a nice V. I would be in as soon as I see that, and I would actually take the bounce off the R4 to the 13, getting my 3 ticks. Now, if you wait for the HMA to change color and you come in here, it's not always a guarantee. Now, in this particular case, you still would have gotten your 3 ticks here, absolutely. Not always a guarantee, though. Maybe something like this over here, by the time the HMA changes color, it'll usually change color between this candle and this candle. You're too close to the 13. So you don't want to be entering in those areas waiting for the HMA to always change color. Now, where you can use the HMA, though, that's if you're just looking for a basic 3 tick scalping trade. Where you can use the HMA is when we start to bring the 3-minute chart into the mix. So let's take a look here. If you notice here, if we just compare the 3-minute to the 1 minute, you're going to see that as a counter trend, I'm not going to really consider this one as a really great opportunity. The first thing I'm going to look at, if I compare at the same time, which is 10:10 in the morning, and I compare where my 3-minute is at, Notice that my 3-minute is not even interested in doing a counter trend at that point. The HMA is still strongly green, and we just have a small blip of a red candle. Who knows, it was probably green, then red, then green, then red. Okay. Whereas up here at 10:25 on this one, if we take a look at this, now we see, first of all, that the HMA has caught up to the price. And we're going to do some of this on the replay so I can actually show you how this transpires. The HMA 1025 hasn't changed color yet, but it has caught up to the price. So what I want you to look for every time you're considering just doing a basic gap trade, not a reversal, this is just a gap trade here. Can you see the price still bounce? We're not ready to reverse yet. The criteria looking for is basically the same rules, but in addition to that, we are looking for the HMA on the 3-minute chart to have caught up to the price. What is the period of my HMA? It's the default setting, which is a period of 14. So you must keep it at 14, because if you change the default setting, then it no longer functions as a true whole moving average. It then becomes something else, a distorted moving average, which is more of the function of a Linreg. You'll see it'll be closer to a Linreg, and you don't need a third Linreg. You already have 2 to work with. So keep the value of the HMA at 14, so to keep the true function of the averages as a whole moving average. Isn't it the price that catches up to the HMA? Well, in a sense, whether you say the price or the HMA catching up to the price, it doesn't matter. But what you want to look for is the line, the actual line coming to and making contact or coming close to that candle. Now, as soon as you see that, you'll notice at that point you got this red candle here. At that particular moment in time, that's when I'm looking to do my 3-tick scalping trade. I'm looking to do it at that particular point. So we're going to look at a couple of these examples where we're going to compare the 3-minute catching up versus the 1-minute, just the regular scalping trade. Now, what does happen though is when the 3-minute changes color, the HMA changes from green to red, you will see that the 1-minute is ready to do a reversal. So you actually have 2 points that you can do your counter trend. You can do your counter trend as a scalping, making sure that the 3-minute HMA is caught up to the 3-minute candle price, and ideally we have a red candle on the 3-minute chart. And the second scenario is when the 3-minute HMA actually changes color here. At this particular point, we have a reversal. And you can now continue doing, you can get in again and do your counter trend. So this is really the only criteria that I would accept or advise you to get in as close to the 13 as possible. That's the only criteria. The 3-minute has to have changed color, and also obviously the price has to be below the HMA going towards the 13. Do you wait for the HMA to change color on the 1-minute chart? Well, by that phase, by the time the HMA catches up to the price on the 3-minute chart, the 1-minute would have already changed color. Well, actually, that's not always true, though. Not always true. Sometimes it'll start a little earlier. That timing kind of varies. So I don't always wait for the 1-minute HMA to change color. I look for the sharp V and I look for the asterisk. But what I do look for is the candle going below the HMA. It must be south of the border. Must be coming below the HMA if I'm going short, or above the HMA if I'm going long. So let's look at a couple examples like this. Here's another one at 11:20. See here at 11:20. Here we got the Lundreg V, the HMA catching up to the price, and we got our basic gap trade. Now, it could have been a reversal. However, you can see based on the moving averages and the trend, the market is not ready to reverse. But we're going to look at something else in just a second. Go over the point with the HMA being lower than the candle, please. Sure. If you look at, if I expand this and you look at the price action, can you see that here the candles are on this side of the HMA? The HMA is in the middle. Can you see that? And as soon as we come to close the gap, at some point the candle is on the other side of the HMA. So I call that north of the border, south of the border. Here the price is pushing north of the border. There's your mountain north of the border. And here the price is pushing south of the border. So what you're looking for is to enter at the top of this candle going lower. Does that make sense? A lot of people have trouble with this positioning on the HMA. So I want to really make sure that you understand which side of the fence you're trading at. Very, very, very nice clue for you to stick with, because see, look at these red candles. If you don't wait for that, you could get faked out. Here's a red candle. Did it go short? No, it's on the wrong side of the border. Here's a red candle. Did it go short? No, it's not ready yet. Okay, here you even had the Lundreg turn, but it never made a sharp V, and I guarantee you the 3-minute wasn't ready yet at that particular point. See, if we look at this 11:15, let's compare that. It's hard to see historical because the price has already moved. The 11:15, you can see the 3-minute is not ready yet. But now closer to 11:20, now you've got the 3-minute coming in as well with its asterisks coming in red, going south of that HMA. And now the price is south of the HMA. Now I'm interested in doing the counter trend. See, the danger with countering the trend is that there's so much agreement and so much momentum following those moving averages that it's very easy to get whipsawed like this. Just when you think we're ready to go, turns around and goes higher. Very, very easy. So you really got to pay attention when you're doing counter trending, which is why I want to cover. There's a few more pointers we're going to look at in just a second. So let's just recap really quickly. Let's look at the 3 timings. There's 3 timings of a gap trade we're going to be looking for here. Let me choose another example so you can see this more clearly. Okay, let's use this one for example. It's 3 timings of a gap trade. Okay, there's actually 3, so I'm going to clarify that for you. Well, let's put it this way. There's 3 different types of counter trends you can do in terms of timing. Okay, so the first timing the first timing is the candle is below the EMA. It's green, and you have an HMA. The color changes. Not sure. I'll come back to your question. So the first timing is this. I want you to really pay attention here. The first timing, these are the ones Barbara used to do a lot more. She does the second one now, but she used to do in the early days. This was the only gap trade she ever did. Before we brought in the HMA, in the old days, we should just use the fractal and the Lundreg 4. These are the ones that Barbara's an absolute expert at. She's a razor sharp on her timing with those particular ones. But like I said earlier, you can get faked out because you're getting in on those very early counter trend moves. Now they usually work nicely sometimes after news items or big HFT bars. These big moves move because there's so much divergence. So let's take a look at this. Here were the first 2 timings you're going to do. This one here is a straightforward, it's the most basic gap trade you can do. It's only a 3 ticker, and this one is high risk because you can, if you get in slightly late on this one, you can get caught in the algos. The algos come in, right, and they push up to that HMA, or they push sometimes a little higher. And you can also get faked out. You can think it's here and it can turn on you. So in terms of risk factor, the first 2 red candles that come in after the big bar is the highest risk one. But you can also get filled the fastest. You want to talk about getting 3 ticks really quickly. If you get your timing right, you can get filled very, very quickly on these, which is why they're so attractive, especially in markets like gold and crude oil. If you notice this is close just after 11:55, you'll notice at that point, the 3-minute is caught up to the price. Now, if you notice before 11:55, at this point, the 3-minute is not ready yet. And I assure you, it's hard to see now, and we're going to see this real time. I'll show you when these candles take off, the HMA is not caught up yet. So the difference between, let's clarify this, the difference between getting faked out on this one here, let's put a square on that so you can really see. That's the fake out scalping trade. The difference between the fake out square and the first circle here is all about the 3-minute HMA. Has the 3-minute HMA caught up to the price? So if we look at, let me do this so you guys just keep it consistent. Let's put a square over here because this is where that first red candle is. And this is where the circle is, the first circle, okay? Now, if we look at the square compared to the square at 11:55 here, I assure you, you can't see it now because this is a historical chart, but when we do it real time, you will see that the price will shoot up and then the HMA will come up and follow. That's the nice thing about the whole moving average being at a period of 14. It's giving you a layer of filter, so you're not getting caught and chasing every candle that changes color for you. You're waiting to say, no, we're ruling out these candles with this filter of the HMA, and it's sort of lagging behind, and only when it reaches a certain position, then I am interested in the candles that follow from that position. So what we're looking at is when the HMA catches up to that candle, when it meets according to the 3-minute, then I'm interested in the scalping 3-tick trade. Now, after that, notice that the algos, you'll see here's our first scalping position. So that's the classic retracement gap trade, and that's the first gap trade that you ever learn as a counter trender. Now, the second gap trade is when the price goes below the HMA. See how even though the algos come up, notice that they're testing that resistance point. They weren't able to penetrate it, so the fact that we're still south of the HMA is a clue that we're not going any higher just yet. Notice that the 3-minute is now south of the HMA. It's moved from north of the HMA to now south of the HMA, so we're heading on the descent. We're heading towards that 13. That's what that position is. You can see here, candles go north. We never really cleared the fence here. We never made it to the 13. Continued north. Here, once we cleared, we managed to close the gap. Continued north. Only once we actually go south of that HMA, the probability of hitting that 13 is very strong. So now, once you see the candles are continuing, you see that the HMA now changes color here. This is when you can go in and complete your gap trade. Now, if you see that the 3-minute is continuing as a red HMA, you will get a reversal on a 1-minute chart. And that is your third counter trend. So we've actually got three types of timings. So let me say it again. The first one is just with the asterisk. Well, actually, it's a circle with a dot. You won't see the asterisk. Circle with a dot. Linreg 4. 3-minute HMA is caught up to the price. Take 3 ticks. Then when you see the 1-minute HMA change color, if you have enough divergence, you can go in for another trade. And then finally, when you see that the 3-minute is also changing color, then you will see a reversal. So those are your 3 different timings. And only when you see the 3-minute change in color and going in for the gap close, is it acceptable to get in at the 13 and continue. That's the only time it's acceptable. It is not acceptable to get in over here because you can experience this bounce. But only when you see the 3 minutes change, the 3-minute HMAs change color and continue. See, this here is still a 1-minute HMA color change, not a 3-minute. But this over here is the 3-minute. Do you use the 1-minute? Yes, I use the 1-minute. Sometimes I steal ticks here. Sometimes I steal ticks here. So we're going to look at those 3 different timings, and hopefully we can see it with the Segredo here as well. Let's do a couple more examples, and then I'm going to show you real time, because this is something I really have to show you real time. Now I've already downloaded the replay for you. And for those of you who don't know how to download the replay, all you need to do is there is a video for it in the FAQ section of the self-paced course. Now, there's one more thing we're going to look at before we do this on the replay. And this is the most important detail that's going to help you further choose better counter trends over the ones that are fake outs. And we're going to look at the scenario. Let's let me just go back here. Okay, this is a okay. So the scenarios, the next thing we're going to be looking for is when the 3 stows are clustered together at the bottom here. So the one thing you are going to use a lot more in counter trending are your stows and MACD. You really do want to use them more for counter trending than necessarily for trending. And you'll notice here your MACD is already gone through the center line. So it's actually going away from the center line, which is the rule for gap trades. So if you're doing a classic gap trade, if you want to rule out the ones additionally as another layer of filter, so we've already added the 3-minute HMA catching up to the price as a filter to avoid the fake outs. Here's another layer of filter that you can additionally add out to disqualify certain retracements and only choose the real choice ones, especially for people who are nervous, hesitant traders and have lost money. So if you want to be really conservative and only choose the best ones, the extra filter you can add is the 3 stows clustered together at the top or the bottom. So it oversold or overbought. So here you can see the thin green line is your 80 line, or the purple line at the bottom is your 20 line. And the 80-20 ratio represents overbought or oversold. So when the moving averages make their way up and they finally hit the top, it says we've oversold, chances are we're going to start coming down. I mean, we've overbought, chances are we're going to come down. If they come to the bottom, then chances are we've oversold and it's time to go up. Now, it doesn't mean that the market is going to change ultimately from an uptrend into a downtrend and vice versa. It doesn't mean it's going to sustain. So please understand that. This is still a short-term prediction or forecasting. This is a short-term forecasting because we're dealing with the short-term. So please don't think just because my stows are at the top that the market is now going to be downtrending. okay? Because as you can see here, the market did come down for X number of ticks. Then it hit the moving averages and went back up. So this is still your short-term trading. So we're still dealing with, you know, your 3-tick trades, 3 to 6-tick trades. So we're not dealing with necessarily a 20-tick trade here. But what we want to look for is every time those stochastics are clustered together and in the right position. And you notice that your MACD is either through the center line, has cleared the center line, going away from the center line, and these are very good choices to choose if you were going to choose a counter trend, a gap trade. It's your classic gap trade. Okay. Now, additionally, we wanted to get real perfect with it. We wanted to improve it by one more degree. We can add the 3-minute chart also. There's a slight variant with this, but you can add the 3-minute chart as well. You will notice that the 3-minute at the same time will also basically be at the top. Sometimes the 100 is not going to be there though. So you can see here at 8 o'clock, we had our first gap trade here. The STO 50 and the STO 20 on the 3-minute chart were at the top. Now, if I'm looking for a short-term 3-tick trade, I'm going to take that trade. But what do I know? Here's the clue. Pay attention to this. Write this down. If your 100 has not reached the 80 line yet, and this is what we're going to be looking to use for when we talk about the trending, chances are the market's going to go higher. So you know that the fact that we have the 3-minute change in color here means we're going to have a little reversal, but it's going to be short-lived. Also, if you're looking at the 1-minute chart, you will notice that as things develop, we have what we call a runaway STO. A runaway STO is when the STO 20 moves rapidly away, leaving the 50 and the 100 behind. In an ideal world, they would move all together. See, here they're moving together. So when they're moving together, the move's really strong. When we get a runaway STO, when this 20, the black line, leaves the other two behind, be ready to get out and do not get in here. Do not be trading short here because things are going to turn around. That's what a runaway STO tells you on a 1-minute chart. And you can look at runaway STOs on all time frames. So I'm now looking at combining these 3 factors. I'm looking at, okay, I can jump in and get my 3 ticks. This is a good one because the STOs are clustered together above the line. They're going to come short here. I've got at least the 50 and the 100, but I know that it's going to be a short-lived move because the 100 has not crossed the 80 line yet. Instead, I'll be looking for something like an uptrend move following. And I see as things develop that we have a runaway STO 20. These are the tiny details that if you've mastered the basic rules and you know what you're doing for the basic counter trend, these tiny details will help you to start making better choices. Now you're going to have to practice this on the replay and train your eye to look for these few extra things, but it will be well worth it to take a minute extra rather than jumping in something in a hurry and deciding if things have lined up. So let's take a look at a couple more. Here's a classic example as well. You notice that the STOs never really hit the bottom here. Can you see they never really hit the bottom? So even though they bounced up, they still came lower and continued lower until that STO 100 made it to the bottom. That STO 100 made it to the bottom. So we're going to be using that scenario for the 3-minute chart. If you look over here, the STOs are all nicely clustered on the top. They've crossed the line. we're nicely ready to do the counter trend. These are the ones that I would recommend that you choose if you want to avoid the fake outs. Now, if the 3-minute confirms that it is as well, then you know that the price is going to continue. So let's look for the ones where the 100 has already crossed. 640. Oh, this one hasn't really crossed after. Let me find. Okay, here's one. 540 going long. Are the stows and MACD accurate on the higher time frames? Yes, they're absolutely accurate. They're just slower, very, very laggy. So you have to think of them more as a long-term forecasting, not so much a short-term forecasting. So here you can see at 540, the stows are nicely together. There's your MACD is below the center line, which is what we look for. And therefore, if it's below the zero line, it needs to go back up at 540, and you got a very nice reversal going back up, crossing the 50. Now, these stows were not perfectly clustered together, but at least the 100 crossed the bottom, and now we're crossing back up in that scenario. So they're not always going to be perfect. So sometimes I will take these ones here, where the 50 and the 20 are going down. The 100 hasn't quite made it yet. I'll keep that as my scalping move. Only because the 3-minute is caught up to the price. So I'll treat that purely as just a basic gap trade, just my scalping 3-tick price. But when I'm looking for these, when I look at these here, where the 3-minute is actually, the stows are below the line or above the 80 line, and I go to my 1-minute chart. It's at 4 o'clock. I'm more interested in taking these because I know that the market is likely to reverse. The strength of the actual reversal is a strong probability because the 3-minute is all lined up. Now this is 4 o'clock in the morning, so things are going to move a little bit more slowly there. So let me see if I can find a couple that are in both directions here. But the key thing you want to be careful, though, is in this scenario here at 8 o'clock. This is what you want to watch for. This is the most important point that I really want you guys to get. And we'll do some replay so you can see this real time. Is this scenario here. At 8 o'clock, in the 8 o'clock zone, we have the price, we had a nice counter trend here at 810. Okay. So we had the stows on the top, we took out 3 ticks. You could have maybe done the reversal and continued lower to the 200 there because the 3-minute HMA changed and it closed the gap. However, what you're watching and you're paying attention to is the fact that the stow 100 hasn't made it to the top yet. And you can see immediately, as soon as it hits the support of those moving averages, the price changed and ran up to the R4. And I always tell people as well, one thing, remember we covered our support and resistance class? When you're trading between the R3 and the R4, the purple pivot and the gold pivot, the market favors going for the R4 more than it does coming short. So you don't want to stay in those counter trends too long, and you want to really pay attention to these stows when choosing them. Because look at this chart here, because we're trying to go up there and hit that R4, and ultimately they'll want to go through it. Okay, and once we're through the R4, once you see that the stows are all at the top like this, that's when you really need your 3-minute chart. At this point, I would not be counter trending when the price is through the R4. You really want to make sure at this point that you're really only trading when that 3-minute is given it to you. Any counter trends. And you'll see, because how high can it go? Well, nobody knows. no guarantee once we're above the R4 that the market is ready to come down. It's very different than when we're at the bottom. On the S4, they want to get things back up. Nobody likes the market to crash. But we love the market to go up. And part of that contributing factor is that there's a lot of, especially stock hedge funds, there's a lot of hedge funds that cannot short by law. They can only buy. They can only wait for buying opportunities, buy and sell at a higher price. So when they see the market going up, they'll come in and start buying and push it higher and push it higher. And so you have to realize that how high can it go? Well, nobody knows. As you can see with gold today, it's still going up. So you want to be very careful, and I don't recommend it. You want to go in and go for 3 ticks and only wait for that 3-minute HMA to change color before you're looking for any type of counter trending.
I don't like the counter
right?
trend.
And you want to be watching for, obviously at this particular point, by this time, the stows are really at the top. See, and I would only be taking these ones here where I see they're more clustered together. So when I see the stows are clustered together, these are the scalping counter trend trades that I'll be taking. But when we're not dealing with the R4 scenario, we're just in the range bound, then counter trending becomes a whole lot easier. Are there any questions?
No.
So it's best to look at the 1-minute bottom of the chart stows first, then look at the MACD next, then to the top chart candles. Yes, you can look at it that way. You can look at the bottom first and go, okay, have we hit the bottom yet? Are we ready to go up? Now, like I said, sometimes it's not always going to be a perfect world. Like sometimes here, you can see the Stowe 20s coming down, and the 50 and 100 haven't made it to the top yet. And you can decide, do you really want to take those? You know, maybe something like this here, where the hundreds made it to the bottom, and things are turning around. And at that point, 7:55, your 3-minute will be confirming as well.
I told you.
We also hit the bottom. The 100 hit the bottom on the 750. So I'm really watching that 100 move, that 100 stow. The 20 stow, the black stow, is ticking. All it does when it's ready to go is it changes its angle. It ticks up or ticks down. So what you're looking for is that nice sharp, that changing angle for that Stowe 20. But in terms of, are we really ready to go up or are we really ready to come down, I'm looking at that 100 Stowe. So the MACD and Stows are for gap trades and perfect trades and not for trends. Yes, I do not use MACDs and Stows for trends, not at all, for clear trades, to be specific, because this is actually still a trend here. As you can see here, we started as a counter trend, Stows at the bottom, and the perfect trades are really the new trend developing in the new direction. It only becomes a trend once that 13 crosses it, and then it becomes the new trend. But now you see at this particular point, we're back to the counter trend. Now we're going into the moving averages. Anytime we're trading candles going towards the majority of the moving averages, then we're counter trending. What we define as the trend is the direction of the majority of the moving averages. So the first thing you look at for whether you're doing a clear trade or a gap trade is where's the candles in relation to majority of the moving averages. See, here we're counter trending, Stowe's at the bottom, because we're going into majority of the moving averages. Moving averages are on top. So are there any questions? Is it clear to everybody? So I'm going to show you the timing in just a second here of that HMA in the 3-minute, and I'm going to show you the 3 timings of that 1-minute chart. And I want to use this particular one specifically.
The nuances are so
not so much when it's above the R4, because when it's above the R4, you have to treat that as a special situation in the market. That's its own situation. You've got to treat that as, oh, we're above the R4. There's no, you really have to wait for things to end. And when we're above the R4, I would even recommend waiting for the HMA to catch up on the 5-minute chart, because that's another timing you can also look at to know that the final trend is really petering out. So you'll see that the HMA of the 5-minute chart hasn't caught up. So as you can see here, only by 12:30, when the HMA is finally caught up to the price, here we go, 12:15, is the market really ready to come back down? So when you're stuck on one directional days like this and you're wondering how high is it going to go, the next thing to look at past the 3-minute chart, because your 3-minute is really your short term and your medium term, the next thing to look at is the relationship of the 5-minute chart. How has the HMA caught up to the price? Same per the 3-minute rule. And where are the stows? The stows are now at the top, and you'll see that we're ready to come back down. Now, we may not bottom out here. We may not continue any lower. What am I looking at to tell me we may not ultimately continue low? We could turn around and go back up. Who can tell me? What am I looking at on my 5-minute chart and my 1-minute chart, essentially? What am I looking at to tell me that this might not be, this trend might not be over? Runaway stow. Good job. You guys are paying attention. All those who said a runaway stow, you guys get a cookie. Because as you can see, look at the black line. It left the other two behind. So this, in the grand scheme of things, this could still be just a retracement. Okay? We could still be going back up. So we would have to wait for these stows to come back, to come south of that 80 line. And so right now things could actually turn around. It's going to come down, may even come down to that 50, but you know, we could still get some more green stuff coming in. So that's what you'll be looking for on one directional days, and you never know. Sometimes it stops at the R4 and turns around and goes right down back to the PP, goes right back down here. Sometimes it goes just above the R4, then turns around, and sometimes it just doesn't come down. It'll just stay flat at the top. So you just don't know. It's a no man's land when you're trading above the levels or below the levels. So you have to really use the time frames being in sync to give you your criteria for the best timing. Very important.
I used to love, I can't stand it.
All right, so let's do this. I'll tell you, counter trading is the most dangerous. I always tell people, when you're above the R4, forget about it. Just move. If you're not doing trend trades, or if you already made your money, it's time to quit. Okay? If it is going to come down, it's not going to come down until 12:15. So once you've hit the R4 by 10 o'clock, in that 10:30 range, if you've hit the R4 by that, it ain't coming down. Very rare that it comes down unless it turns around before the R4. But once we cross that R4 by 10:30 in Eastern Standard Time, we're not coming down. So don't even bother counter trading at that time. In fact, just quit for the day, go find another market to trade, and come back after 12:15 if you're looking for any counter trending. Very, very important that you know this. This is the worst time to counter trend, between 10:30 and 12:15 when we're above the R4. Would you follow the 5-minute green fractal at 13:33.60? Are you talking about this green fractal here on the 5-minute chart? Yeah. Well, yeah, you can. Absolutely. And remember, as I said in my support and resistance classes, you are using the green and red fractals for your counter trending. So the circle with the dot coming in is actually there to give you your green fractal. And that circle with the dot is what you're using as your cue to get in for your counter trend. So for counter trends, you're trading off the red and green fractals. See here, if we're doing the gap trade, we'll be trading off the red fractal. The other colors don't come in until after the fact. So when we're dealing with the other colors, we're dealing with reversals. So you're looking for that circle of the dot. Can you review your GC trades from today? I can't because they're on another computer, unfortunately. I want to show you some specific things. Now, okay, so let's actually do this real time so you guys can actually see this. Now that you understand the main points we're focusing on: the stows, the HMA on the 3, the 1 and the 5, and obviously the basic criteria, which is the circle of the dot and the lim reg, and the divergence to the 13. So let's look at these factors real time. Now I had chosen a particular position. Let me just see the is it this? Let me see which one did I. Now 8:30 there was some news, so it's a little tricky because it's a fundamental
I hate when
move.
she does the news item too, because that goes differently than anything else. Also, it's so much easier. I hate when she does that.
So I can't really use that. Let me there was a specific one I wanted to show you. Just give me a second here. Yesterday. Oh, this was it. It was 8 o'clock yesterday. That's right. So, because it was when there's news, it just moves everything so fast that it's not really a technical thing. It's not something that develops and progresses technically. So it's just the momentum of the price that creates the criteria. So that's not a valid example, really. It's after the fact. So I want something that's technically valid so you guys can see a good example of that. Okay, so let's take it from, I'm going to connect to the replay here. And we'll take it from this, don't know if yeah, we'll take it from this 8:30 here. 8:30. Are you talking about the R4 by 10:30 only for GC or all other contracts? Whenever we talk about these rules, they're true for all markets. They're all markets abide by the basic rules. Now, there's always an exception here and there because a fundamental came in or a news item or somebody's talking about XYZ and it affects the market and does something different than it normally does. There's always the odd day out of the month where that occurs. So you never want to abort a rule and say, oh, it doesn't work, it's not true, because this happened today. You always got to take into account, you got to keep things within the context. There's always an exception to the rule. However, most of the time, the rules will work for you. So you have to, you remember day in and day out, you're looking for self-organizing patterns that repeat themselves so that you have something consistent that you can rely on. And if you're following my money management system where you're just going for 2 to 4 trades a day, starting in one account, doing a second account, the chances of you finding the right moves is very, very strong. Very, very high. Okay, so let's go to, we're in August here, and I'm going to go to the 7th. And I'm going to go to 8:30. All right, so here we are. Now, as you can see, it's a very choppy market. It's early in the morning, right? And we're in this, you can see the higher time frames in this transition here. So whenever we're changing from previous trend, it can get very, very choppy. So, but what we're looking at is the MACD is going through the center line, so we're going up in an uptrend. And now we can see the price is actually reversed through, we're going up here, but we're looking for some counter trend opportunity. So let's push play here. Summer doldrums are definitely affect with the NG, would you say? Yes, summer doldrums affects all markets. So if you haven't already made money and you haven't started trading live, I don't recommend that you trade in the month of August. Especially the last 2 weeks of August is the worst time if you haven't already perfected your strategies. Unless you're really going to use these filters, like only trade when the stows are at the bottom or the top, and only choose, go in there and get your 3 ticks and get out. Scalping is all you really got, because what happens is you get a lot of setups with no follow through, and then you get HFTs that just explode out of nowhere and you don't even have a chance to catch it. So you're always behind, you're always a dollar late, a day late and a dollar short. That's how August is. You're always a day late and a dollar short. You're always behind the move, in front of the move, it goes the other way, and it's just a nightmare. And I always try to tell traders, don't push it in August. Now, if you're comfortable trading, you already made some money and so forth, you were successful in June and July, then, you're going to go scalp some trades, then fine, do a couple of trades, 3 to 4 trades, and then be done with it. Wait till September. September, you're going to see it's a very different market. You're going to get very nice swings, very nice trends. You're going to get in, and all the moves are going to be about, between, about 10 tick moves, and you're going to go in for, 6 or 10 ticks. So it's a lot different in September. June and September are the 2 best months to trade, before the summer doldrums and after the summer doldrums. September and October. But July and August are the worst times. You should just take off. But that's a good time to learn the rules and practice on the replay. So I'm going to speed things up a little here because I want to show you something. So now we watch the 1-minute chart. Notice that the stows haven't made it to the 80 line. So we're looking at the stows are actually coming down. We have a little counter trend here. But is this a trade? Is this a counter trend that I'm really interested at this point? Okay, because look what I'm looking at. Sure, the price is coming down. Okay, the price is coming down. But is this really a trade that I'm interested in? No, because we're right on support. Everything is at, here's the 200 right there. So we're trading into the moving averages. So there's no real spread. And the stows haven't made it to the top yet. So that tells me they're still on the way up. They've ticked down for a moment because we've got all this HFT where they're pushing in and then taking their profits and then pushing up and then taking their profits. So this isn't really a nice choice time to be taking a trade. And also notice that the 3 minutes still going through the center line. Look at the MACD here. So I'm looking at that still going through the center line. This hasn't made it to the 80 line here. The only reason this is coming here is because of these HFT bars. When you have these big HFT bars, immediately the market pulls back behind it.
stows are turned.
So they'll shoot up and then they'll immediately pull back. That's why jumping in on these big candles in a flat market like this, when you see the moving averages clustered together like this, is a big mistake. You want to wait for the moving averages to diverge a little bit before you start jumping in any big bars. But when the moving averages are clustered like this, it's a sideways market. That's what those moving averages are telling you. And it's really a battleground for the bulls and the bears. Who's going to win this fight? Are we going to go down or are we going to go up? Look at your 15-minute. It's got to get through that 50. We've got to reverse and go through that 50. So let's see here a little speed it. See how low they go before they turn around. See, and no sooner if you're getting short, now it's going green. Because as long as that 3-minute 100 has not made it to the top, then we're still going up. If the moving averages are back in that direction, and according to the 1-minute chart, we are setting up for a fan here. The moving averages are back in the direction we're about to pop into a fan, right? And the 100 has got to get up to that top 80. So now, if I'm watching this as it's looking like it's, notice we have a fractal cross coming in here. There on the 1-minute chart, you got a fractal cross on your 3-minute and your 5-minute. See the trajectory? Tells you got a nice strong move. And with the fractal cross, you go the direction of the Linregs and the direction of the moving averages. And there's our nice strong move. Look at that. Very nice trend. Now we're gonna talk about the trend part next week, so make sure you don't miss next week's class. But I just want to talk about the gap trade. Now let's pause this for a second, because notice that the 1-minute has now basically made it up to the line. We're just still crossing it, but do you see what I want you to look at is that the 3-minute HMA has not caught up to the price. That's the first nuance you always look for when counter trending. So you look at the price, you see it's going red, you got this circle with a dot, you got the tail, the wick, right? But the price has not, the HMA has not caught up to the candle. Okay, the stows are kind of getting there. The 1-minute's made it there, so chances are we'll bounce with this, but it has not made it to the price. Do you see that? So that's the first criteria. Notice on the 5-minute chart, the HMA has not caught up to the candle. And if we look at the 15-minute chart, the HMA has not caught up to the candle. So one thing you know right now, as long as that HMA has not caught up to the candle on any of those charts, the market is going up. And the same for short. The market is coming down as long as those HMAs have not caught up to the candle. So that's the first clue you should be looking for. Everybody write this down. HMA catch up to the candle. That's all you need to remember before you counter trend. Now, on the 1-minute chart, it has caught up. And we've got the circle dot, we've got the nice V. So I could be taking this. Usually after a nice FG, this is where Barbara, now I had it at high speed, so we missed the entry point. This is where Barbara, in her razor sharp eyes, will be jumping in and stealing her 3 ticks in the good old days.
That's all Barbara does.
What do you mean by HMA's caught up to the candle? Can you see this is the real-time candle? Remember, the candle closest to the right side of the edge is your current candle. Can you see that the HMA here, on this candle, the HMA is already touching and through it? This green line, right? That's following the Linregs. Can you see how it hasn't caught up? It's not touching the candle. Can you see here? The HMA is touching this candle, but it's not touching this candle. The HMA is here by this candle, but it's not nowhere near this candle. Can you see here on the 1-minute chart that the HMA is touching the candle? So when it's touching the candle, with the bottom of the candle, we say that it's caught up. as long as they're spread between the HMA, the actual line, and the body of the candle, the wick or the body, then it hasn't caught up yet. So I wouldn't take this trade right now. Especially when I'm trading against the moving averages like this, I wouldn't take right now. But let's watch how this transpires.
Of course, you've got to be right now.
So this is going to keep you out of trouble. So you don't get whipsawed.
Because I would have said it's too caught up to the candle on the line.
Ja, det är väldigt tekniskt.
Oh, I would have taken it.
Okay.
Yeah, I would have taken it.
Yeah, okay.
Can you see the probability factor? It could go up, it could come down. This is not a counter trend you want to do necessarily. Now,
oh, I would take it. I knew I would have taken it.
Now the fact that we have some price action coming down is, like I said,
3 tips. Oh no, look, it's changing.
the first gap trade, right? That's the first gap trade where we look for this, where if we look at the rules, okay, if you're scalping, except for scalping on the 1-minute timings, you don't need the HMA, right? So it's the first gap trade where you're looking for the V, you're looking for the asterisk, and you're looking for some resistance or support to bounce off, and as long as there's divergence and you see the 1-minute HMA is caught up to the price, then you go in, your stows are at the top, you go in and you take your 3 ticks. That's the first gap trade. But it doesn't mean that the market's done, is ready to reverse. Notice the degrees on your 13, and notice now on this candle the HMA is catching up to the price. You see here's the wick of the candle. Can you see? Can you see the HMA is a lot closer to the price? How do you know it's not going to just be a gap trade and move into a clear trade? Well, that's the thing. It is going to move into a clear trade. How do you know? How do you know? Because if you look at the 3-minute chart, this is just a gap trade. This is a gap trade. And how do you know it's not going to reverse short? It's going to go long because your 3-minute stows are continuing. They haven't made it to the top. That's how we know it's going to continue higher. Same with your 5-minute stows are still going up.
Also, this is going right in. This is going into the MACD is showing you it's
So now you can see that the HMA is catching up to the 3-minute price. Now we don't have a lot of room to work with here because this is still very flat, coming out of a very flat zone in the market. But watch here as it continues higher. See, now you can see, I just really want you to first see the behavior of the HMA in relation to the candle. So now you can see that at this particular point, the HMA is caught up to the 3-minute chart. So from this point on, I would consider a gap trade more because the HMA is caught up. That's the first clue you're looking at. But before that, don't even think about it.
I wouldn't go near it.
Don't even think about it, because you can get whipsawed in a heartbeat, and you'll see a lot of times it will do this. So I want you to really look for that, focus on that rule tomorrow. Notice that the gap trades are much smoother if you only choose the ones where the 3-minute HMA is caught up to the price. So now the price is continuing a little lower, 1-minute HMA, but now I'm not really interested in trading that because we're on support. And notice we've already hit support. Now's not a time to be jumping in.
No.
Why is this not a time to be jumping in necessarily? Who can tell me?
Because of the MACD.
3-minute stows are pretty reliable? Yes, I mean, they're not always going to make it to the top. Sometimes they're going to turn around, and if they turn around. But why am I not going to take this counter trend here and expect a reversal necessarily? There's 2 things I'm looking at. So for those of you who said price is on the 13, you're correct. You get a cookie. But there's one more thing. Who can tell me?
How can you tell the prices on the?
Okay, so we're looking across the board here, right? We're not just looking at the 1-minute chart. Too much divergence on the 13 and 20. Yes, what else? We're talking about the nuances that we covered today so far. Good. HMA under the price. What? Under? Stows on 3. Longer term stows. Too much divergence. No color change. No, HMA's not change color. 3-minute candle above the... Yes! Harriet is the only one who got it right. Harriet, you get a double chocolate chip cookie. Everybody else said the right things. They were good factors, but they weren't the one golden rule that I was looking for that I mentioned earlier that you should take note of. Remember, the next thing to note for, if once the HMA is caught up to the price, the next thing to look for is the price below the HMA. If it's not pushing below the HMA or already cleared below the HMA, I'm not interested in any shorting. This could all turn back to green. We've got too much support here. This red candle could change to green in a heartbeat. It's not something I can rely on just yet. Now, the 5-minute, notice the 5-minute HMA has caught up to the price, and this is a red candle, so that's a plus. So we could go short, but I have to wait for that to occur. And I want to wait for this candle to be pushing through at the very least, and better yet, to be on the other side of the HMA.
What's the problem? This one looks lovely.
Well, the 1 minute, you got a 1 minute. You can't do
So let's see what happens next.
This is not even Barbara. It's not even Barbara's.
Speed it up a little bit.
You were looking for a reversal now.
Now I'm going to move, because I want to show you a bunch of different examples. I'm going to move through this a little quickly. Okay, so now the candle's pushing through. Can you see now? Now the candle is below the HMA, and the 5 is pushing through, and the 15-minute is still red. Now I'm interested in closing the gap for the 3-minute chart. Now it doesn't. Now it's not. This is gold, so you get a lot more price action. It's not like the euro and some of the penny markets when you have to consider how much space you have. The nice thing about gold and crude oil is one of these bars will absolutely give you 3 ticks. So if you wanted to trade from here to the 13, you would most definitely get it. Okay. And you see that the 100 is very close to the top here. So the main thing I want you to get from this is the different timings. So the first gap trade was the HMA caught up here. We're trading the circle with the dot, the Linweg 4V, and the spread. The second timing is waiting for making sure that the HMA is caught up to the price. And then thirdly, we want to make sure that the price is below the HMA. And you can see across the board, the 5-minute is also caught up. But let's see how much price we get. We may not get a whole lot here.
I'm definitely not. I'm going to torture you, Mel, after all this.
MACD's crossing on the 1-minute chart, yes, and the stows are coming down nicely. Okay. We are on a pivot, though. Can you see here the 3 minutes on the pivot? So we didn't get a whole lot of price. Can you see? Because the trend line, not quite. Can you see we're at 69.70? We haven't quite made it to the top yet. We're almost to the top. 100 hasn't made it. It's got to hit the 80 line. Hasn't made it to the top. So you want to be very, very, very careful here. And the fact that, now let me just show you another thing to look for.
I thought you got a lot of
This is another nuance you really want to pay attention to. And you're wondering why, at this particular scenario, you're wondering why the price didn't come all the way to the 13. It came down before, and it, you know, a lot of the other times it came down, but over here it just whipsawed on you. Why? Who can tell me why?
Because of the MACD.
13 didn't cross the 20, yes. But why wouldn't you, what's the big contributing factor? HMA didn't change color on the 3-minute chart. Exactly. So there's 2 things we can look at here. The HMA never changed color, very tight There wasn't really, out of all the gap trades I could have chosen, wasn't a whole lot.
It's a
But the
stupid-
most important thing to look for is you see how the 13, this EMA, has changed from dark green to light green.
Yes.
We changed from support. Not only that, we've started a new trend.
The MACD is showing.
And the reason you know that we started a new trend is because every time the 13 moving average crosses the 20 SMA, the green line crosses the black line, the direction of that cross is the direction of the trend.
Yes.
Now, if you notice, from the point across, if your gap trade is close to the cross, chances are it's going to be short-lived or not make it to the 13, especially if the moving averages are coming out of a cluster, a fist, into a fan.
She does not get
Can you see how they were clustered? They came to a cluster and now they're bursting into a fan. These moving averages are now taking on trajectory,
Yes.
going from fist to fan. That means it's a very big party. That party has got a lot of momentum coming in. So you want to be very, very careful about trading. The only time you really should be considering a gap trade, and if you really want to take those, is this one here. Don't be jumping in here when you see this event. And notice, we're almost to the top. We haven't quite made it yet. The 100's still got more to go, and that's what I'm looking at. So when I see the 100's still got more to go, which we're going to cover next week in more detail, what am I looking for? I'm looking for trend trades. I'm trading with the 100 on the 3-minute chart. So I wait for the gap trades, and then I jump in here and off I go. Okay, but we're going to talk about that next week. So let's continue here because we're going to do a bunch more. So I want to show you some better timings. This is the tricky ones. I'm showing you the tricky ones first so you can really see the difference, and then I'll show you some better ones. So now watch here, we're going higher, we're going higher. So these are not gap trades I'm really interested in. Stows have not made it to the top yet. Okay? These are just the 3-tick scalps. Classic, simple, and if you're not razor sharp, getting off that circle, of trading off that green fractal, if you're not comfortable looking for that circle dot and trading off that green fractal, grabbing your 3 ticks to the 13, then you shouldn't be doing these. You should rather wait for the 3-minute, give you a little bit more spread, give you a nice red HMA, and give you something to work with. You see, and now the HMA has caught up to the 3-minute price. So any divergence, any nice gap trade that could come in, if there's enough divergence for me to get one, then I'll take it. So ideally, at this point, you want to wait for the trend to be over with. But what we're watching here is the relationship of the price and the HMA. So now notice, we've got the gap trade on the red candle. So once I've seen here that the trend is developed a little bit more, can you see that the 100 is now on the 80 line? We've actually made it to the 80 line. Now the other stow, the 50 is still going to make it. We're still going to make, but the 100 and the 50 here have made it to the 80 line. If we're at the 80 line, and I'm more likely to do a scalping trade if I know that we're at the 80 line. This is a much better time to be jumping in and going for your 3 ticks here. Notice that we have a red candle, and the HMA, look at the HMA, is caught up to the price. It's touching the candle as opposed to far away from it. So these are the better scalping trades to do if you're going to be jumping in and taking the circle with the dot, then reg B, grabbing your 3 ticks to the 13. And now we're going to be looking for if we're going to see they're going to sustain and come back down. We're watching the rest of these stows though. Most of the time they also have to go a little higher, so let's see here if it continues a little higher. Still continuing higher, not ready yet, not over yet. And you don't mind it continuing higher. You've taken your 3 ticks on the scalp, but because the more divergence you get, the better the ride. So here's another 3 tick scalp, comes in on the red candle, it's touching the HMA, got the circle with a dot.
Oh, we have a second scalp.
The HMA hasn't changed red yet, but we are below the HMA. So that's a good sign. That means we could go lower still. Not yet. We haven't changed color yet. Notice now that the 20 and the 50 and the 100 have crossed the 80 line. So now we are officially overbought. Okay, we're overbought. So that's a very positive sign. If we get an HMA, a red HMA, we will have a nice reversal.
Oh, this is lovely. Okay. And lovely. Mark, do you like it?
5 minute has still got higher to go. The 5 minute 100 has still got higher to go. Can you see the 5 minute chart?
We're losing so much money.
The only good thing about this is that the HMA is caught up to the price.
Oh, good.
So, 3 minute is starting to change red. Let's see if they sustain. Starting to change to red. Not yet. Oh, no. 5 minutes still got a ways to go. Still interested in the uptrend.
Oh, please, more.
See, and all these counter trends here are too close to support on the 1 minute chart. There's no real spread for you to trade here, so you wouldn't be taking these counter trends. You know, these are real slim pickings because the whole time it was all about the stows completing their cycle. The 5 minute stows are completing their cycle. The 3 minute stows have now made it on the top, but they're not ready yet. The 5 minute is still going yet. So if you really want to make sure that a strong trend, especially when it's on a fan, has ended cycle, has come to the end of its algorithm, you want to pay attention to those 5 minute stows. Now notice that the 5 minute stows are at the top. Now this is where I'm interested in doing my gap trades. Here's my 1 minute scalping trade. How much play does the wick tail come into play on these gaps? Well, the wick is very, very important because then you know that the HFTs have been there and done it. Because when the HFTs have come in, and you'll know them because they can't sustain the price. They move so quickly at lightning speed. They go shoot up, they come right back down, and nobody can trade that fast except a robot. Humans can't trade that fast. So when they come in, they've been and done it, then you know they're going to take their profits. So then they're going to pull back. So those are very, very important because they've hit their benchmark, and they can't sustain means it can only come back down. See, on these other candles, you will notice that the price kind of just moves up. Let's see here on a 1 minute chart. It just moves up. But when you get to the final candle, you usually get a long wick, and you'll get the circle with a dot. Can you see the circle with a dot? That means we're probably ready to counter trend off this green fractal on the 5 minute chart. But what I'm really looking at are the positions of the stows on the 80 line. Now, as a trend trader, I'm now interested in taking up the counter trend. And at this point, I'm looking for the 3 minute and the 5 minute closing the gap. So we'll see here. They just made it could still even go higher. But here I would definitely take a three tick gap trade based on the red candle with the asterisk and the price moving below the price here. Now watch the 3 minute come down. See if it's ready. Oh, still back to green. Not ready yet. 5 minutes still finishing its cycle. And the nice thing about gold is it moves in points. So any one of these red candles will definitely give you 3 ticks. But when you're in markets like NG and the currencies, then you really want to make sure you have enough spread and that things are really lined up, because they need a whole lot more price action to give you your 3 ticks. Now the 3 minutes staying red, now the 3 minutes closing its gap, and the 1 minute is reversing. Notice the 3 minute HMA, and now the 5 minute is reversing. So also understand that when you're doing these counter trends, let's look at it from a 1 minute perspective here. Let's say you came in here and took your 3 ticks. You still, and let's say you were interested in reversing. Let's say you took another trade somewhere here. You could get a little bit of risk. You could get some green stuff here, because counter trends are never just a nice smooth ride like the trends. The trends don't give you this kind of slow moving bouncy ride. It's sort of you get in and boom, you filled. And that's what we'll talk about next week. But there's no reason you can still get significant amount of price action on the counter trends. But the key thing is here you can see the different timings of the 3 types of counter trends. The first one being, again, just to recap, the circle with the dot comes in, and usually you get your 3 ticks on these first 2 candles. The thing that you're looking for is that the HMA is caught up to the price, the Lindbergh 4 makes a sharp V, and there's enough spread. And you will notice at that point, when you see that your 3 minute candle will be red. And the HMA, the only time I do those is that the 3 minute candle is red and the HMA is at least caught up to the candle. It doesn't have to be south of the HMA, but at least caught up to the candle to get my first counter trade 3 tick trade. And what I'm looking for essentially as well is the 3 minute stows above the 80 line. Then I know that they've completed their cycle, things are going to peter out enough for me to get a counter trend. Then the next timing I'm looking for is if the 3 minute is ready to close its gap. I'm really looking for the 3 minute the HMA to change red, and there's enough divergence to come down and get a gap trade. So I'm looking to trade here. And what's also nice is if you can use the 5 minute stows as well, being on top. And you'll notice that the 5 minute HMA is already caught up to the price at that point. And then obviously if the 3 minute, then let's say you're in the trade and you want to continue riding it through, you're following your 5 minute here. Your 5 minute HMA is now red at this point. The 5 minute HMA will be changing to red. Those red candles, and that's going to give you your 1 minute reversal counter trend trade, where the 13 and 20 cross. So you could enter at any one of these. You could enter anywhere here and trade to the 50. Now, I would always, if you're doing a reversal in gold, not so much for other markets. Some markets, in fact, I'm just going to use this as a rule of thumb across the board. Let me make one other point that's really important here. It doesn't matter whether you do this trade, or this trade, or a little bit of each of them where you get in here and you trade to here, or you get in here and you trade to here. It doesn't matter, and you ignore the green stuff in between. What does matter, though, on counter trending in general is that you must respect the 50 SMA, especially for gold and crude oil. Especially for gold, mostly. You must respect the 50 SMA. In fact, you should just get out. I don't care if it squeezes lower. You should just get out. You should never enter a trade on the 50 SMA on a counter trend. Never. You should just be out. That is your ultimate landing point. That's like landing on the 13. That's it. You're out. And then you have to wait to see, because the one downside about the stows and the MACD is that they're lagging indicators. And like I said before, just because they hit the 80 line, they're overbought, doesn't mean that they're going to necessarily always go down to oversold. See, here we're at 56. This is a little bit of a runaway stow. Can you see here? Can you see here? Here we managed to cross below, but the other two didn't make it. Doesn't mean that they're going to go from a bullish market now to a bearish market as a trend. It just means we did our counter trend. So, and the dividing line is the 50 SMA. That is the battleground to see, are we going to continue lower or higher? So at this point, you have to wait for the market to tell you. And these stows could hang out at the top for another hour. This stow 20 could turn around, catch back up to the 150, and they could stay up top for another hour before coming down to the 20. That's the downside of stows and MACDs. You don't know that just because we're at the high, we're now going to go to the low, and the timing of that. You don't know the timing. It could be 2 hours later. It could be 5 minutes later. You don't know. So you have to wait for it. And what tells you that they're going to go lower usually is the 13. Remember, as I've always said, what's the golden rule? It doesn't cross till it crosses, and always locate the 13 in relation to the barrier. How far is the 13, and if that 13 is going to cross? So if the 13 crosses here, and what another clue to look for at this stage is bring in your 15-minute chart. This is where I'm checking my 15-minute chart. If I see that its HMA is caught up to the price, okay, and I'm going to be watching to see this candle real time, if it stays red. Also, I'm going to be watching the fancy bar timer. So my eye skims across all these little details. Okay, how far are we going to go? Maybe I should wait till the next candle comes in because the fancy bar timer is going to be over. Or is this candle going to stay, is it going to stay red? So for this to go lower, this 50-minute has to now say it's going to close the gap. Now, the fact that the HMA is caught up, good, we closed the gap across the medium and the low time frames. That's what this red candle gave you. But it doesn't mean it's going to come down and close the gap yet. Notice that its stows haven't made it all the way to the top yet. It could just be a short lift move. So we're going to be watching that. So it's a domino. First the 1 goes, then the 3, then the 5, then the 15. And there's different timings to minimize your risk along the way. So let's take a look here, what happens next. So what I'm watching for is for this to cross, and it's going to come down to the 100. But now, what are we doing now? Now we're actually going into trend trade mode because the 13 is ideally crossing here. But still, like I said, this could change back to green. This could all change back to green. So we're looking at this point, do we have a trend trade set up to go lower, to come down? And now notice that the 50-minute candle is coming below, the new candle came in, it's coming below the HMA, right, and trying to close its gap. But like I said, look at the divergence of the HMAs. The fact that the stows haven't made it to the top yet doesn't mean it's ready to go lower just yet. So locating those stows for your counter trend is a really important detail to know if the trends are over or not. See, now what I look for when I see that, and which we're going to cover next week, we're going to use them for counter trends and we're going to use them in reverse. If I see the stows haven't made it to the top and I suddenly see I got a setup for a trend, I'm going to take it matchy all the way. So can you see how just because we're red on the higher time frames doesn't mean that it's a guarantee we're going to come back down? That 13 still has to get closer to that 100 moving average and ideally catch up and close the gap. Where would you have entered? 50-minute MACD also has not crossed the center line. Yes, it's still got to go a little ways more. The MACD not crossing the center line is another contributing factor. But but remember, we're talking about medium term, short term, medium term, and long term. So I know that ultimately the MACD has to go through the center line here, but can I still take 3-tick gap trades? Absolutely. So somebody asked where I would have entered. Well, on these, typically, remember what we're talking about, and I'll see if we can do a couple here. What we're talking about is, as soon as the circle with the dot appears, candle with a long wick, 5 or more ticks, Lone Red 4 making a sharp V, right? Generally will put you on the first candle, the first red candle. That's where you will be entering for your basic classic 3-tick scalp. If you want to enter on the first candle that's going red, the HMA is caught up to the price. Remember what I said earlier and what I've stated here? When you're doing the first scalp trade, HMA changing color is an exception for 1-minute scalp timings. So you don't need to wait for the 1-minute HMA. By the time the 1-minute HMA changes color, you're already too close to the 13. It's too late. This is the basic criteria for the basic scalp 3-tick trade. So you're trading with the Lone Red 4, the fractal, the green fractal, some other resistance point like a pivot or a moving average, and the fact that the HMA is caught up to the price. The fact that we have a long wick. The momentum falls off. No more momentum in the bottom of this bar. So I'll be entering on the first red candle and getting my 3 ticks before we land on the 13 to avoid this bounce. And you don't have to wait for the candle to close. Just jump in and get your 3 ticks on this push. That's what you want. Now, the next timing, that's the first one. The next timing, you wait for the HMA and you just grab the next candle. You're waiting for the HMA to change red. So obviously you would have to have a red candle. So then you would be grabbing this candle and stealing 3 ticks as it pushes through based on, you know it's going to push through the 13. You just grab as soon as you see the HMA change color, you would just be jumping in. You know that it's pushing through because the 3-minute HMA has now changed to red, and it's got space before it lands on the 13. So at this point, you're doing the 3-minute gap trade. So you're trading from this point, the 3-minute gap trade. And then, lastly, the reversal, you see that the 5-minute HMA is now ready to close the gap. So between the 3 and the 5, closing their gap is going to cause a reversal. But you're only trading to the 50 SMA. So you could get in at the cross of the 13, you could get in at this cross and trade it to the 50. Or you could get in here and ride it through the cross, or you could get in here and take it all the way. This is a little bit more risky because you will get some green candles in between. So this is where most people trade reversals, the perfect trade. Following the 3 stows and the MACD lining up, they're getting somewhere here once the 3-minute has changed to red, and then they ride it through the cross. So which candle you get in on there at that stage is not really relevant from this point on, because you're trading the 3-minute gap trade and you're actually trading it to the 13. And if we look at where the price was, where the 13 is sitting at 82.1, so the 13 sitting roughly at 82.1, guess what? Look where the 50 SMA is at 82, just 82.1, 81.9. So you can see that you actually closing the 3-minute gap at that point. You're not getting on the asterisk. Well, the asterisk is the contributing factor, but you don't wait for the asterisk to form, because the asterisk only forms at the close of this bar. Okay, you're actually waiting for the circle with the dot to come in. Okay, you can also wait for the asterisk and then jump in. Please repeat your point about respect the 50 SMA. Which time frame? On the 1 minute chart. On the 1 minute chart, when you're trading counter trends going into the moving averages, okay, never trade through or into the 50 SMA. Notice that it came here and turned right around. You don't know which way it's going to go at this point, and you really have to wait for your next setup. And your next setup is either going to be a trend short or it's going to be a trend long here. That's your next setup. Or the 200 SMA. Yeah, we're not talking about the support and resistance information in general right now. We're not talking about the other moving averages. But these are nuances that are relative to counter trending. Okay, so we're not really counter trending to the 200. We're usually counter trending off the 200, which I'll show you that in just a second. Most of the time we're counter trending off the 200, so that's not really an issue right now. But all counter trending, 90% of your counter trending is going to be to the 50 SMA, which is why I'm talking about it. This is going to happen to you time and time again, so you need to know this. You don't sit there thinking, oh, nice red candle, we're going to go through, we got momentum. No, you're going to lose all your profits that you were just made if you don't get out. So actually I'll leave those there for a minute, okay, and well, I got rid of them. But let me just show you here for a second. The only time we're counter trending to the 200 is if we're in a fist. Can you see they're in a cluster? That's a different scenario when we're in a cluster. Counter trending to the 200, but most of the time we're going to the 50. Okay, we're counter trending off the 200. Can you see here? There's your gap trade bouncing off the 200. Here's another one. We're going up, we counter trend off the 200. But 90% of your reversals are going to be going to the 50, which is why you have to respect it. So, in other words, you need to be out by the time you hit the 50. And if you're going to trade next, you've got to wait for that 13 to cross it, and at that point, you're dealing with a trend trade, not a counter trend trade. See, here's a classic example if you don't pay attention to the 50. Trying to get this so you really see this. Look at these candles. They stop on a dime. We go up, we come down. We go up, we come down. We go up, we come down. Look at that 13 in relation to the 50. Finally, we go up when we cross the 50. So when it comes to counter trading, you want to make sure you out by the 50. All right, let's do a couple more here. I've noticed over and over that when the 50 SMA on a loser time frame, when it matches the 13 on the higher time frame, this is when a gap happens. Yes. Yeah. Because remember what I said, you may not have caught this in other classes, is that the different time frames are all showing you the same support and resistance points in the market in general. They're just plotting with different colored moving averages. So what's purple on the 1, it could be a green on the 3, could be blue on the 5, could be, green on the 15. So but there's still a support. All you have to know is that it's a support level or a resistance level, meaning that the market's not likely to penetrate through it unless the right ingredients are there. This is why I always say in my support and resistance class that you must pay attention to the moving averages across the board, because they're all levels of support and resistance, meaning the market's going to bounce. So let's see how this, so now we're getting into the 50-minute gap trade scenario. The circle over the candle needs the Linreg too. Yes, you will see the Linreg form as well. I'll see if we can catch another one here. So now we're kind of in no man's land, right? Because these stows are kind of meandering. This one's there. We have a runaway stow, could come down. And every time I see these runaway stows like this, okay, I'm really paying attention to that 50. So there's not enough spread for me to trade here. The 50 is a clear barrier. It's not going to get through it. So notice now on the 15-minute chart, guys, we're watching our stows. Remember, that's the big secret here that we're looking for. Notice that our 50 has now crossed the 80 line. So that's a good thing. We could be coming back down. But the 100 is still a ways away, but we could get a nice little gap trade here, and the MACD has crossed the center line. The blue, and we only really care about the blue. We don't care the fact that the red's not through. So now also notice that the 50-minute is below the HMA. It's holding to the support fractal. It's got to get through. And so as soon as this starts to come back down and close its gap, it sometimes gets a green candle here and it'll go all the way up to this HMA. And here we are closing the gap. But what are we doing here at this particular point? We're doing our trend trades, right? We're doing our trend trades. So anytime we're trading with the moving averages crossing, we're doing our trend trades. As this is summer doldrums, so it's very, very choppy, and this is what you can expect sometimes. Very, very choppy. And this kind of chop on a trend trade is only because we're trying to, let me see, we're trying to trade a trend trade on the 1-minute chart, touching candle, crossing the 50, based on the 15-minute gap trade. So let me just show you apples to apples. This technical setup here is very different from this setup here, where it's crossing the 50. Notice here, when we cross the 50, okay, now in this case the 100 happens to be below it, but when we cross the 50, it's a very smooth ride. It's not very choppy. We get a whole lot of price action. This is a lot of price action. We were all the way at 77.0. We shot all the way up to 79.9, almost 80. So that's you know, a lot of price action for your basic trend trade. But the difference is the fact that across that 50 moving average is that if you look at your 15-minute chart, and I cover this in my algorithm class, you're trading with the trend of the 15-minute chart versus the counter trend of the 15-minute chart. So whenever I do the counter trend per the higher time frames, I keep my target, I just do 3-tick trades. I keep my target short, and I pay attention to barriers. So if I see it's on top of the 100, I'm not expecting the price to go through it, because there's not enough traders trading downstream to trading short at this point. When the 50-minute is showing you that majority of the moving averages are going long, then I know most of the traders are in agreement with that. So when I get a cross of a 50 SMA going long, I'm going to take those, because that's the direction of the 15-minute trend. I'm going to look for those, but we'll do more of that next week. We just want to focus on what do we do. Let's say you missed the trend. You slept in and you missed it. You came here and now you've got the counter trend. What do? First thing you do, we're going to recap in just a minute. The first thing you do is pay attention to the stows. So you want to, if you just missed the trend, you're looking at the position of the stows. And you're starting with the 1-minute chart, and then you move to the 3-minute stows, then you move to the 5-minute stows. So you can trade every single one of these as long as the 3-minute and the 1-minute are given to you at the very least. Does that make sense? So let's see here. Let's do this. I want to, unfortunately, the gold has been doing so much trending that the counter trendings haven't been the best yet. So I'm going to pick, I'm going to, I think this is the one, the 935 with the 3-minute stows. Let's do the 935. So let's go here to 930. I'm going to go back to 930. And we'll do a couple on the dome for you, so you can see the different timings. Sorry. Oh, why is it not moving? Hold on. To fix this. Not there. All right, so here I have the dome, and let's watch this in action. Now, see the circle with the dot? Notice that the 3-minute is caught up to the price, the circle with the dot coming in. And also the HMA, can you see the HMA is caught up to 3-minute price, also the 5-minute chart as well, right? 15-minute chart hasn't made it yet, but what I am looking at for this next criteria coming at is notice that the 3-minute stows are at the top. All 3 of them. That's a really good sign for your gap trading opportunity that you're looking for. When you see those 3-minute stows all the way at the top, the 5-minute is just making it, just crossing as well. Your 1-minute stows are already at the top. So we're going to be watching here and looking for our counter trend opportunity. But always remember, the first thing you're looking at is the HMA touching the price? And where are the stows on the 80 line before you even consider doing a counter trend? Is this true? If you miss the trend, check the stows to see if they have hit the 20 to 80 to see the direction of the market to determine the counter trend opportunities. Yes, that's what I just said. So you've missed the trend. You missed that. It happens to the best of us. We would all love to catch these, but a lot of times we miss them. And you can't chase the price. Chasing this trend is not a good idea. Instead, watch for the stows. Say, okay, you missed it. Watch the stows. Watch the HMA. Look for it, especially on the 3-minute chart, because that's going to give you your short-term and medium-term entry points. The 5-minute, 15-minute might not be fully lined up yet. That's okay, because you're looking for just something initial that you can take as a short-term counter trend. You know, you're just looking for 3 ticks. Do you look for bounces off pivots in this situation? Yes. In all counter trending, it's best to take them when they bounce off a barrier, like a pivot, a moving average, or a fractal. And if you have 2 barriers, that's even better. So here we have the R1 pivot. We have the fractal giving you a circle with a dot. So and my stows are at the top, so I'm looking to see, could this be my opportunity to go short? Got my asterisks, and I'm already in by the second candle, and there I just got my 3 ticks in a flash. Done. And this is real time. 1x. So it's done. So you see how I didn't hesitate. I didn't check a whole bunch of things after the fact before I pulled the trigger, because I was expecting it. I knew it was coming based on the nuances that we covered today. The stows, the HMA touching the price. So now all I have to wait is for the red to come in. I'm looking for the circle with the dot. There's the V. And in fact, I waited to see this turn to an asterisk here. As soon as the second red candle, I don't like to get in on the first red candle, because those can turn back to green. If I see there's spread there, look at the spread. I'm nowhere near the 13. This is miles away for scalping. Okay, but I like to catch the second red candle because it's pushing below the HMA. That's my main criteria, and I want to see at least one red candle on the 3-minute chart. One red candle. So at least I got 2 time frames that are red. That tells me there's enough traders. There's not too many traders going short yet, but there's a handful enough traders to guarantee my 3-tick short. So did you all see that? So that's scalping on the 1-minute chart. That's what scalping is. That's what we call scalping. And I'm trading off, and the fact that you have the R1 plus fractal, that means you have 2 barriers to work with. Those are the best to go for. But notice I didn't choose the earlier one or any other ones because I'm waiting for the stows to go to overboard. What kind of market order? Yeah, on these, because they're so fast, I just jump in at a market order. I don't use the market button. I usually use the quick buttons. I sell on the bid or buy on the ask. That's what I do. But I'm so used to doing that I just put my cursor here and I jump in real fast. So I catch the bar. You see, if you do a market order, you could still get in at the bottom of the bar if it's a fast bar, especially being in gold. Now, what Barbara likes to do is what's called a level 2. But she sees the first red candle. She does a level 2. So here's a limit order. That's level 1. This is level 2. Now she waits for the price to come up to her and pick her up, which you can also do. You can also do a level 2, which are really nice for gap trades. That means it doesn't have to go so far, because if you're in at level 2, then the price only has to go 2 ticks and you've got your 3 ticks. So you get filled even faster if you do level 2s. But you don't always catch it if you do it's a finicky timing, so you got to be careful. Sometimes you miss the opportunity and you go, oh well, on to the next one. So when I'm waiting for something like this, and you're waiting and you're waiting and you're waiting and you're waiting, I don't waste my time missing things with level 2s. I just jump in. Because sometimes you get them, you don't get them with level 2s. They leave you behind in the dust. So let's do another one. How do you get the bid and the ask buttons? You simply right-click on your dome, and you go to Properties, and it says Show Quick Buttons. Show Quick Buttons, set it to True. I need clarification on the pivots. Are the pivots daily or intraday pivots? The pivots, if you just hit the data box, the magnifying glass on your chart, okay, and basically, let's put it this way: the ones that have letters next to them, are pivots. We don't list the intraday pivots, okay? These are intraday pivots. So we only really focus on the the intraday pivots, and these are the ones that are labeled. So you can see them here. Pivots R4, meaning there's actually a letter and a number next to the pivot. If I scrunch my chart, you will see the dotted pivots, the little dotted, they don't have labels next to them. So the ones that are not labeled are your interday pivots. Those are from your interdays, right? They're a little weaker in terms of support and resistance. They're not as strong as your intraday pivots. And then we got the bottom three are the previous high, previous low, and previous close, which are your solid black, green, and pink line. So those are the only pivots you really need to be concerned with. The solid ones, the previous high, low, and close. The dotted ones, which have no labels, are your interday, and the ones with the S's and the R's next to them are the actual pivots that you need to be concerned with. So that's the easy way of remembering that. Okay? How do you turn off the confirm buy box? You simply go to your control center and you go to tools, options, and you see where it says tools and options, confirm order placement, just uncheck it. Uncheck the confirm order placement. How do you get the LR brown line to show up on top of the candles? If you have a problem with the display, all you do is you fix what's called the Z factor. You can actually you can do the search on Ninja website and type in Z factor, and it'll give you the instruction, but simply put your cursor on the indicator, or the candles, and you hold your control shift key down at the same time, hold it down while you roll your center wheel of your mouse. You have to have a mouse with a center wheel to do this. And you can see the display changes from behind to on top. And when it's in the right position you want it to be, then you simply release. But you must left click on the actual indicator first. If you left click on the chart and you hold your control shift key and roll, it's going to move your chart back and forth. So it has to actually be on, you have to select something. So you must select the indicator. I just select inside the candle. And you hold your control shift key down while you roll the center wheel of your mouse and release. Your HMA color change, what chart is that off? Is that off the list? What chart? HMA color change. I don't understand your question. Is level 2 one tick or 2 ticks away from the price? Well, it can vary with different markets based on the spread. So we don't look at the price so much for level 2 because the price is never stagnant. It moves back and forth, back and forth, back and forth. So I'm not concerned about level 2 in relation to the price. What we look for is the numbers in the queue. This first set of number, the number 3, is level 1. The second set of number is level 2. This is level 3, 4, 5. 6 is the accumulation of the 5 levels. And these are average numbers. They're never true numbers, okay? They're just averages. But they're just there to tell you what the levels are. So there's always 6 levels. So we only look at the buy and sell columns for the levels. So level 1 is where the first set of numbers starts that is closest to whatever the price is. So the price can be in different places based on different markets and based on the spread. But the queue is what you're looking at. The chart you're using, I don't see that on the list when setting up the charts. The chart I'm using is the Mel Basic. You just simply right-click on the chart, oops, and you go to Templates, Load, and load the Mel Basic chart. That's what I would start with. And then all you need to do is add the HMA color change, because when I created this template, we didn't have the HMA color change released yet. So just start with the Mel Basic chart, and if you don't see it, then you need to download from the website, the Shadow Traders website. You don't have the latest download. You need to go into Members Download in the member login box on the Shadow Traders website and download Setup 7.14, which is the latest current software. So once you download that, the templates will appear in your, when you create a chart and you right click and you go to templates and load, and you will have a list. You won't have as many as I have here because I've created a bunch. You have a handful, and then you can add things and take things off and create different templates as I have. And there are videos in the FAQ to tell you how to do these steps as well. So Mel Basic. Are there any other questions? I can take up all your questions. Let me see if we can do one more trade here. So that was the first one, really quickly. And again, the stows were at the top. HMA was touching the price. And on the 1 minute chart, we followed the scalping rules, which is the circle with a dot. The Linreg 4 makes a V. There's enough divergence before we hit the 13. And I usually jump in. You can take the first or the second candle. I prefer the second candle because it goes below the HMA. And I just jump in and get my 3 ticks. So now the 1 minute has closed the gap. I'm not interested in getting in yet. That's it. The 1 minute has completed its cycle for counter trending. When it lands on that 13, it is complete. So now we're looking for the 3 minute, because now we're looking at the domino effect. If the 1 minute's completed gap trade, the next one to go is the 3 minute. Then the next one after that is the 5 minute. And the next one after that is the 15 minute. So we could be bouncing here and going long and then coming down for the 3 minute or the 5 minute. So we have to wait for those timings. It is not a good idea to just jump in and stay short, assuming they're all going to close their gaps. It's better to wait for the setup and trade the 1 minute gap, then wait for the next setup and trade the 3 minute gap, then wait for the next setup and trade the 5 minute gap and 15 minute gap, because you're going to get a bunch of green in between and you don't want to have to incur risk. I'm curious how long it took to make 1,130 in NG. Well, if you're trading 3 contracts, depending on how many ticks you're going for, it doesn't have to take a whole lot. All depends how many ticks you're going for. If doing a gap trade short and a 3 minute HMA changed to red, and the green candle instead of red below the 13 EMA, do you take the trade? Yes. So now you can see the green stuff. See how we're bouncing? Because the 1 minute gap trade cycle has completed. We are at support. Okay, so now I'm waiting for either the 3 minute HMA to change color or the price to go lower here, lower than the HMA. So sometimes, let's say we get in here, watch here. Sometimes, if I get in here, we can get a nice red candle on the 3 minute because we're going below the HMA, and sometimes we can incur some risk. So this is a timing you have to play with here, because if the 3 minute HMA changes to red, then it'll cause this 1 minute to go through the 13. So sometimes I just wait for, especially if I see the 5 minute coming red, I just wait for the 3 minute candle to go below the HMA and I take my 3 ticks. And sometimes if the trend is too strong, I'll wait for the green candle. But notice that the 5 minute stows are at the top. You see, the stows are really what's telling us the uptrend is hit its peak. And that is what we're using to say the probability is very high as long as I time it just right. So now we look, I took the last 3 going to the 13, so now I can wait for the 5 minutes to come below the HMA and the 3 minutes to turn red, and this will go through the 13 and start heading for a reversal, and then you'll start to see the 15-minute will start to come in. Is the gap always going to fill in the 3-minute and 5-minute charts? Yes. If the stows are on the top like this and you see your 15-minute has, now let me give you one last tip of the day. If you want to know if your gaps are always going to fill, that's a very, very good question. Okay? I'll give you the last tip of the day. You want to watch for your 15-minute fractal. And you want to look for the circle with the dot on the 15-minute chart. See, here's the circle. When you see that circle with the dot coming, see now a 5-minute is going. When that comes in, you'll notice that your 5 and your 3 will close the gap. So the fact that the stows are at the top, now see there's a circle with a dot. I'm looking for that circle with a dot on the 5 and the 15. The stows are at the top to know that the 3, mid, and 5 are going to close the gap. And you'll watch that come in. I'll speed this up a little bit because we're running out of time here, but watch. See, 3 mid hasn't closed the gap yet. We still got 80. This is the bottom of the candles, 82.2. We still got to get down to 81.7. So there's more ticks. So now my HMA is flattening. Okay, my HMA is flat. I'm waiting for this red, but I'm looking at this 15-minute because this is where the fractal is going to come in. If that circle holds, now my HMA is red. My HMA is red on my 3-minute chart. Now I'm trading the 5-minute. The 5-minute gap, the 5 minutes now going to push down. They've got to get through that pivot. The only problem we're having here, and I'll tell you, it's best to choose ones. The reason why this was a little bit of a bumpy ride here, even though when it continued, is because there was a solid black line in the way. Can you see the solid black line? So it's just having a little bit of a difficult time getting through. It's all set up to come down. It's going to do it, but it's on that pivot. So it's best to take ones, if you're concerned about that risk, it's best to take ones that don't have a pivot like that in the way. You know, you take the early part and then you wait for the price to get through the pivot. So you would trade the later part of this reversal. But you'll be trading the reversal part as opposed to riding through the reversal like this and incurring this risk, you see. So I want to show you this. And it's all to do with what barriers are in the middle of the road. And this black line, which is the previous close of yesterday, you can just click your magnifying glass on the top of your chart, and you will see there it's the previous close of yesterday. That black line is what's giving us a little bit of a hard time. That doesn't mean it's not going to go short. Okay, because the stows are at the top, right? But let's look at that 15-minute chart. I'm going to speed it up a little bit here. Watch when that 15-minute chart comes in. So you see how the 3-minute changed to red, then it went back to green, and now it's back to red again. So and you can expect this kind of thing on counter trends. So that's why I say timing is different. Now it's solidly red. Now the 15-minute is giving me a red candle coming in. So some reversals are smooth and some reversals are not so smooth. And the biggest hiccup on this one is that we're trying to get through a major pivot, which is the previous close. Previous close is pretty much a solid pivot. It's a strong pivot. Okay, there's the circle with the dot. Do you see it coming in? There's the circle with the dot coming in. So that tells me the 3 and the 50, the 3 and the 5 are pretty much going to close the gaps, especially if that turns to an asterisk and the fractal forms. And we'll get through that pivot. And there it goes. So if you want to avoid that kind of mess, right? You want to avoid that kind of mess. See, now notice that the 5 minutes goes in the gap. Then my last tip of the day in terms of timing on your counter trend, and I'll do this with the 1 and the remember we talked about today there's 3 timings for your counter trend, right? And some are smoother than others. You can expect it all kinds of things to happen, but the key thing we're looking at, you can grab the first 3 ticks on the first initial move. You can grab the last 3 ticks as it's pushing through the price based on the 3-minute chart, or you can get in from the point of cross. Instead of getting in here, you can get in from the point of cross and trade the reversal to the 50 instead of where I did and incur the risk. And what you can use to improve that timing is the 15-minute circle with the dot. You want to see the 15-minute circle with the dot coming for its fractal, and the HMA must have caught up to the price. Limerick makes a nice sharp V, and there's your nice red candle. So you can see that the 50-minute is now giving you the classic counter trend rules. Okay, it doesn't involve the HMA at this point. That's the next timing, but it's giving you the initial counter trend. So these rules apply on all time frames. With the 15-minute chart, go to 2080. It will go as long as now it may bounce in between. So I'll speed this up here so you can see it. It may bounce in between. Okay, it may bounce in between, but it should go down as long as it goes below the HMA. See, now in this case, even though we got the asterisks, right, and there it's coming down, it could be a little higher. Now, what are you looking at here? The biggest contributing factor to it not making it all the way, you can't just assume that the 50-minute is going to do it on the first run or in one go. You can't assume that. Remember, we're dealing with short-term, medium-term, and long-term, right? So what we were using as a criteria to confirm our entry points, we were using these confirmations for short-term trading. So let me make this clear. We were using it for our short-term trading. Now, for the 15 minutes to do it, it could bounce in between because it hasn't penetrated through its pivot really. But the most important thing is, what do I always say from the beginning of the class? You have to look at the stows for counter trending. If the 100 hasn't made it to the top, chances are it's still got to go a little higher to complete its cycle. So really, if you really want to know if the longer term projection is ready yet, it's all about that 100. Now watch here, I'll speed it up in ending off. When the 50-minute finally gets to the 100, when the 100 finally gets to the top on the 50-minute chart, you see it's probably at the PP by then. Okay, then you'll notice there's the 100 crossing the 80 line. Now it's ready to close its gap. So at the end of the day, and there we get a very nice reversal, a lot smoother. So what have we learned today? At the end of the day, for counter trending, the 3 stows and the MACD usage is really what's going to help you, and there's different timings, opportunities you can take advantage of. Starting with the 1 minute, when the 1 minute stows are at the top, ready to come down, then you get the 3 minute stows at the top, okay, ready to come down, and here's the 3 minute stows are at the top. As long as that 100 has crossed the top, and then you get and when they're in a cluster, they're even nicer. Sometimes they're spread out, sometimes they're in a cluster. And then you get the 5-minute stows at the top. Okay, those are going to give you different timings for counter trends. And then finally, when your 50-minute has given you its classic gap trade criteria, which starting with the circle with a dot, giving you the confirmed asterisk of the fractal, some sort of pivot or barrier, and most importantly, its stows have crossed the top, then you know the cycles have completed and we're ready for a counter trend. So I hope you guys, I know that's a lot of details, but remember, you're looking at these in nanoseconds, right? And if you know this, and all you have to do is replay, go replay and start with a day and, scroll back like this and look for the stows and actually go practice them and see how the 3-minute looks, how the 5-minute looks, how the 50-minute looks, so you can see the different evolution of the cycle in the timing of the stows, the MACD, and the HMA most importantly. Do that a few times and you will train your eye to look for them. So it's not something you should think about or have to remember to go look there. If you go practice that, when you're counter trending, you always look for the stows, the HMA in relation to the price, and your red candles and your matchy across the board, and then you start to pick the better ones. This has been a great class as always. Thank you. Excellent. You're going to try it. Excellent. Do the stows always cycle to the tops and the bottoms? Most of the time they do. Sometimes they'll meander through they'll take their sweet time. Like if you see on the 50-minute chart, if I scrunch this up, okay, sometimes they'll meander because it's a one-directional day. They'll meander on the bottom, and we just had a couple of runaway stows here, okay? Now, on a lower time frame, so the higher time frame it will meander a bit more. But when you're dealing with a lower time frame, they will go to the tops and bottoms a lot more often throughout the day. As you can see, this is 4 o'clock in the morning, and we're only traded half the day here, and you can see here's a nice bottom. Okay, we didn't make it all the way to the top on the first run, but that's still a nice gap trade there. Here's another bottom, went all the way to the top, nice reversal. Okay, sometimes it's just the 50 and the 100. If you look at this one here, the 50 and the 20 will give you a little retracement, but not the 100. The 100's still got to go to the 80 line, so you know that things are going higher, and that's next week we're going to be talking about how to look for that to help you to spot those trends coming in. And then when it's finally the 100 has reached the top, then you know that's where you're going to get your prize reversals going to the 200. Okay? And so then it makes it to the bottom and it starts its evolution again. See, now we have the different scenario. Now the 100's got to make it all the way to the bottom, and only when the 100 makes it to the bottom do we get our prize reversals. The rest of the time it's really a little bit of a chop, and you've got to time your entries really well. So you want to look for those across the board. Does the NG also suffer from summer doldrums? All markets suffer from summer doldrums, and that's why I say you want to choose your entries really clearly. Be specific. You want to be specific about your trades. So you don't want to just say, oh, this is some green stuff, the market's going up, or this is some red stuff, the market's coming down. Especially in the summer, because you're going to get a lot of setups that have no follow through. You either want to say, you know what, I'm not going to take this one because the 100 has not made it to the top yet. So you see, when you're looking for something like this, here's your circle with a dot, you say, I'm not going to make it because it's almost, my 100 has not made it to the top yet. Once the 100's made it to the top, and by this time the 3-minute hasn't come in yet, and once the 3-minute has come in with its confirmations, this is the 3-minute chart, but then you know you're ready to trade. So these nuances is what's going to help you improve your choices and not get faked out. So focus on that. And next week it's going to be really exciting. It's going to be my favorite strategy, which is the trending. And you're going to learn both. We're going to cover the nuances for the trending. And then we'll start the agendas all over. So thank you guys. I wish you all the best. Trade conservatively. Remember, less is more. Less is really more. And I forgot again to show you the Segredo, but I'll show you the Segredo next week. Now, just in closing on the Segredo, again, all you're looking for are these blue bars, the blue and the red coming in. When those blue bars come in, you see those confirmations, and if you see that the Segredo gives you the blue bar for the scalping, then you take it, and when you see, I like to use my 1 and my 3 for counter trending on the Segredo, and when you see the blue and the yellow, here's the yellow coming in for your reversals or your gap trades, but you're looking for the blue on the 1 and the 3, and that's what I will be doing. Otherwise, send me an email to Melanie Sun Trades, and I'll send you the rules for the basic strategies, and I'll answer any questions that you have. But I hope you guys got a lot out of the class, and go practice, practice, practice. And I'll see you next week. Ciao for now.
The organizer has ended the session, and this call will be disconnected. Goodbye.